All right, everyone, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So market's finally able to break kind of through this range here. Last couple of weeks we've been talking about, look at the tightness of this range here. Little micro kind of bullish inside bar pattern. We said there was, a chance we could get one more move up here. Although, admittedly, I was favoring at this point the downside to a degree, as I just felt it was taking too long for the bulls to break it out. But, here we go. So we got a move up here, and we've gotten through this kind of short-term resistance around 415. We never really got a close above that other than one day. And then we did get a one-day close above it Thursday and Friday. A little bit of a pullback there, as kind of some debt ceiling jitters going on, and they're still deliberating here over the weekend. I'm doing this video on Sunday afternoon, and there's still more deliberations going on. It's a political theater. We're just looking at the charts here, so I can't tell you which way they want to go with it, or if it's going to be a sell the news. It certainly could be. It could be something that gives us a blow off top. Is this move here that we have enough for a blow off top? I think you get up into this area, into this gap again. We've had this targeted really since April, and in fact I should say probably before April. I've had this area, this gap, penciled in on my charts really since December for upside targets, which we never got to, but either way you have that broadening channel there, so the upsloping trend line, downsloping trend line, and it lines right up with the gap. And if you go back even farther, we go back a couple of years even, this has been a point of control for the market. This is an area we couldn't break out of in April 2021, and then we back tested it in July, and then we came down in 2022, of course, hammered on it, broke through it, and then it finally broke, and then we got one close above it, and it came back down. So this is an important level regardless, and we'll be watching that moving forward. So definitely think that we would be obviously favoring that being holding up as resistance if we were to go test that. So markets here, I think, again, we've been saying this for a while. I still think we're closer to resistance than we are to support. We've talked about breadth like ad nauseum, right? Very, very thin leadership right now. If you look at, we've talked about AI and so on and so forth, but if you look at the S&P XAI stocks like Nvidia, AMD, Google, those names that have just been, Microsoft that has been pumping the AI train. Nvidia has earnings, by the way, I believe this Wednesday, so that will be interesting as well. But take a look at the returns here. So we're basically flat for the year, as opposed to up 8%, minus those AI names here. Again, very thin leadership, but again, the market's holding up, and we got to respect it here. If we look at the triple Qs here, when we go to a weekly, you can see that we did wick through and actually close above the 50% fib. So that's holding up really well here. Again, again, we're going up into light volume, and we're going into a big resistance zone. So again, all this chop here, and you can kind of see it, I think, better on a monthly. We'll clean those lines up there, but you can see that big wide range red bar, and these two wide range bars as well. Look at the volume there, and we're going up on light volume. So again, I think we are closer to resistance than we are to support. And again, we're going vertical here. That's usually what happens when you get a blow off top. Is that enough? Did they gamma squeeze it enough to get enough shorts out? That remains to be seen. Again, we got the debt ceiling going on here. Maybe that's a catalyst one way or the other. Either way, we are very overbought on the Qs. So any way you look at it, I'm favoring at least a pullback here. And again, fundamentally, things just don't line up, right? So again, we look at bonds here. Take a look at the 2-year, and we're going to look at the 2-year note here. That did a little chart damage this week as well. That's coming back in. The 10-year note, same kind of deal, as well as the 30-year there. That's actually a little bit of a breakdown there for the 30-year. It's got some support in this area, but why does this matter? Well, the triple Qs have got to get in line with the 30-year. So those jaws have to snap shut. Additionally, HYG, this is not really kind of signaling bull market here. So again, just not a strong chart. Anyway, look at it. If we go, look back here, this is still hanging out at the lows. Look at a weekly, still hanging out at the lows here. This has not really participated. It's still obviously holding the October lows, but it has not participated in the rally, much like the Qs have. So again, it's a bit of a divergence. They can hold it up longer. Maybe Nvidia says AI, 1,001 times Wednesday, and it goes higher. You can't rule that out here. I do know, though, that we are into a lot of resistance, and again, we're still kind of favoring That kind of correction here, probably going into June. But again, we'll see what we get. As long as the volume remains light, as long as, if they haven't squeezed out enough shorts, again, I think we might still have to go test this gap here, maybe even Monday or Tuesday. We're not that far away. And again, that would kind of coincide with this topside trend line here. I think there's a very good chance you pull back probably into, I would say, June OPEX. There's definitely a window of risk that I see opened up in kind of the volatility markets there. And that's really all we can look at right now. Again, the VIX here, we've talked about that. But this is kind of that time of the year, whereas we get to that quarterly OPEX, where we have a window open in the vol markets, and those hedges are a little exposed here. VIX still, hanging out at the lows here, but still has a slight higher low. We'll see if that builds off of it next week, but either way, markets are hanging in there. Let's look at the levels here again. For the spiders, we're looking at the 422 gap fill and this upside trend line. If we start to break down for some, at some point we lose 410, we'll look at 400 as an important level, because you have this broadening channel as well as this upsloping trend line, and they kind of meet right in that area. So if you do have some type of sell-off, there's going to be some support in that area. And then if you get through that trend line, I'd say there's a lot around 390, a lot of support there. Obviously, that's getting ahead of ourselves here, but those are the levels we're watching here. For the triple Qs, if we start to pull back here, you'll have some support at 322. If you get through that, it's down to 310. I still think, regardless, we are into, quite a bit of resistance here. There's not really one really good level. I mean, you could make a case that right here, and we're looking on a weekly, right around 340. We're basically into it right there. So that's been a good kind of nexus right in that zone there, and we're right into it, and that could coincide, with that gap fill, that 422 area on the SPY. So those are the levels that we're watching going into next week. As far as the Russell 2000 is concerned, that had a pretty good gap and crap. And again, this goes to show you here the thin leadership. It's pretty much the triple Q show. Not a really good showing on Friday. I don't really see this getting much through 180 right now, if it can even get up there. But that did back off, and this is not a really good. It's not a good at all weekly or monthly chart pattern here. So again, just bear that in mind. The Dow via the diamond here, again backing off on Friday. That was price cap weighted, so we won't make too much out of it. But below 331 and really below 329 takes you down to 325. Outside of that, I would say 340 is kind of your upside resistance there. Over to some sectors here. So let's start off, as always, with the semiconductors. And semiconductors had a little micro breakout today, or I should say last week. Nvidia, again, continuing to gamma squeeze up. 60% of the call volume on Wednesday, Thursday in Nvidia was for Friday's expiration. That means that market makers, I'm very interested to see that if those hedges come off here and those market makers turn into sellers this week. Either way, the AI train is on, the gamma squeeze train is on. There's AMD having a big week as well, but there's the SMH. Again, we're watching this big rising wedge pattern. If we go out to the weekly, you can see we're right into that upper trend line there. And again, still a lot of resistance up here, declining volume, going into heavy volume. So again, we'd favor a pullback here, but if they keep the volume light, they can keep it held up a little bit longer. So again, we just got to respect that. IGV, same thing. Nice pullback pattern. The chart firmed up a little bit. We talked about that last week, little pullback and then a pop into this week. We finally got through that 310 area. There's another gap around 315, and then there's another level a little bit higher right there at 322.43. So that's low, and you can actually extend that as well. If we extend that to the left, you can see that has also been a POC and support resistance area going back to even 2020. So those are some pretty good levels there on the IGV. Again, low volume, going into high volume, just be aware of that here, but it's holding up and we'll respect it. Completely diverging from that. So we generally like to look at the semiconductors and cloud for good leading indicators, but another leading indicator we like to look at is the transports, and this is completely diverged, right? So again, it's been this way since February. We had a blow off move in February, lower highs all the way down, and even lower lows too. And this wedge is getting tight here. If this starts to break down, again, that you can make a case that's a head and shoulder there. If that if we get a weekly close below that, this is going to go a lot lower here. This is completely giving a different signal than the SMH, right? So semiconductors, they're very important. They're in everything. They're kind of like the transports in a way that they are a leading indicator, but the transports themselves are very weak. So again, lots of divergences, lots of distortions going out here. I know they probably threw a lot of liquidity at the market when we had the banking crisis in March. maybe that's just keeping up. It went into tech. That's really one possibility I can think of here, but again, lots of distortions out there. We talked about bonds with the triple Qs. Those jaws need to come shut, and the transports. This is problematic as well. So, anyways, let's get over here to housing. XHB to start off with. Pretty good engulfing reversal on Friday, so double top held. I favor a pullback here to 68 in the short term. But nice reversal there. I do think these are coming in as well. ITB, same thing. Right around 72 would be a pretty good level there. Maybe 71.50 if it will pull back. But again, still a strong sector here, but we did have a nice reversal there. On Friday for VNQ, still remains weak here. We lost these pivots here. Again, so that 80, 50 area that we've got to close below that. And now we just have kind of an inside bar pattern building up on the daily. So that is set up for one more push down here as well. So VNQ definitely on the weaker side and definitely diverged from the home builders, and it has been for quite a while here. XLF, so financials, they participated a little bit in the rally, got, a nice pop Wednesday, Thursday, and then came back in on Friday. Still a weekly bear pattern though. So I'm still not a fan of the XLF on the weekly, but it got a little bit of a bid, so we'll leave it at that for now. KRE back tested 40. We talked about this. I said there's going to be. I know a lot of people wanted to buy down here, and maybe it can hold, but you consolidated here for a month. There's anybody who tried to buy down here is underwater, and they're probably going to turn into sellers here. So I just don't really see that much upside here for the financials. Same thing with KBE there, right around 36. There's good resistance. KRE, if you get through 40, can you go to 40, 41, 42? It's possible. That's really all the upside I see for it at the moment. That's if it even has any. Broker dealers here finally testing the 50-day moving average. We talked about this possible ABC pattern. And, it's basically into resistance. So I said 445 to 450. We got to 445.93 on Friday before stalling out at that 50 MA. It probably needs to consolidate a little bit more to get to 450 if it's going to do that, but into a decent little level right there right now, so that may need to pull back again. I still don't like this on the bigger time frames, either way you look at it. All right, shifting gears over to energy here, so let's start off with crude. So crude, kind of just a bit of a neutral week here. Shorts are building up in this though, and they still are. So again, if we look at non-commercial net longs in major oil contracts at the lowest in over a decade. So lots they definitely squeezed out a lot of those longs. I actually traded this with members here. We did pick it up on that big dump a few weeks ago, and we made a nice little buck off of it for a quick swing trade here. I'm not so sure what it wants to do here in the near term. I'm a little bit more neutral on it. I would have preferred a daily close above that 20 MA. I still think we may have a little bit more weakness here, and I know Jason and I talked about this on the podcast early in the beginning of the year, and we said we'll probably have a major bottom in energy by the second half of the year. I still think that's the case. We may just have a little bit more weakness here moving forward. I'm not seeing a V shape or anything like that says that's screaming buy right now, but we're starting to see. I think we're getting close, right? We're seeing those longs get flushed out of the market. We're seeing shorts build up. If you get one more dump here in crude, I think that's probably a very, very good buying opportunity, especially for the second half of the year. For right now, though, I'm a little bit more neutral on it. I'm not sure if it wants to consolidate for one more pop to 76, or if it wants to roll back over and test 68 again. So a little bit more neutral there. For XLE, I would like to see this correct a little bit more. There's a very good area right down here. So we tried to break down back in September, and then it reversed. Like that's where the institutional money is sitting. That's where I'd like to get, XLE somewhere in that area. It got a nice pop, Wednesday, Thursday, Friday. We got a little bit of a bid, still below those moving averages though. So, and I just think this trend line, we've hit it too many times, and it's getting weaker here. So I would like to see a little bit more of a correction in some of these, but then they will be buys. XOP, same thing. That got a bid on Friday. If we look on the weekly here, you do have still a lot of support around 110, and then of course a big level right at 100, and then there's that 200 week moving average. So those would be some levels to watch moving forward. XOP, OIH, again, just holding on to that 100 week moving average here. Again, I still think this wants to go down and test maybe 220, 225. Natural gas had a big move this week. Again, we talked about the rigs last week, and I've been saying this for months here. The low is going to be in before the inventory number changes, and we had a much better than expected build on Thursday, and we had a 10% rally. But you can see the low was put in April, and then we've had higher lows, and then you can see, I know this is a kind of skewed chart because of the moving averages, but if you can take a look, up move, bull flag, up move, another 1-2 pullback, and then a big pop. So smart money knows beforehand, right? They're not going to wait. They're not going to wait for the inventory number to improve before they start accumulating. They just know that it's cheap, and they will pay for it now while it's cheap. If you wait for the inventory numbers to improve, you're likely going to miss the move. So right now, I've been saying this for a while. I think the bottom is in nat gas. We had a nice pop on Thursday, backed off of the 100 MA. Next stop here is 3, then 350 and $4. But nat gas looking much, much better this week. Uranium here, not a whole lot going on. We can pretty much refer to last week's charts here. Still just watching this big wedge pattern. URNM still couldn't get above that nexus there, so that's still acting as resistance. If that backs off again, still probably around that 2250 area would be support. MOS here, so back into the potash names. I still like these levels here, so I like this. I like Mosaic right in this area here. Got a nice little doji after a sell-off. That can often be a turnaround signal there. Would prefer a little bit more volume on it. We'll see what that does next week. I do like NTR in this area. I like NTR. That has hit my level, so that previous high, 618, lots of support in this area, so that is a good level there on NTR. I like that for a bounce potentially. And then DBC here, a little bit on the softer side this week. This one may need to back off a little bit more. Over to the dollar index here. So the DXY, just give me 1 second. I'm going to pull up my other chart here. So DXY getting a bid this week and getting above that 102.80 area, and we got to close above the 20-week moving average. So I like the dollar in this area. I do think there's probably a low in place. So again, another kind of thing here, and this is another thing that happened this week. Take a look at the dollar. Tuesday, Wednesday, Thursday, green, with a green stock market. Some of that may be OPEX related, certainly, but again, it's just another divergence here that's building up. If the dollar consolidates here, it can get up into that 105 area. If you lose this area, then it may need to go back down and test 100 after all. But right now, it's showing strength, and we got a nice close on the weekly time frame above that 20-week moving average. Gold here holding up okay, although it did back off. We retested that 1962.50 area. Remember that quarterly high. If this consolidates, I think it needs to do some more backing and filling here, probably to that 1900 handle. If we can take a trend line, the previous all-time high, basically, and you can just connect those dots, and that's where you are. Maybe get some support at the 20-week moving average as well. But I think gold's got to do a little bit more backing and filling here. Just got really overbought. Same thing with silver. Hit my 2350 level and got a bounce on Friday, so we'll see what that does. 22 is going to be a much, much better buy level though, so we'll see if that can back off a little bit more, and we'll continue to watch the PMs moving forward. Platinum I like on the bigger time frames. I just want to see some more consolidation, and really the same thing here with palladium. I love this on the monthly time frame. Would just like to see more of a daily and weekly chart pattern start to form, but I like palladium much so here. Copper here lastly, kind of a bearish inside bar, so big down move, and then we're just sideways inside of that, so that is setting up. I do not like 360. I would probably say 350 to 340 is going to be your next level, unless you can get back above 385. So this is setting up here a sideways pattern for one more push down, but there's lots of good support here between that 340 and 350 area, and we'll watch that as we get into those levels. Lastly, Bitcoin here, so still just kind of hanging around with that head and shoulder, right? So, here's your shoulder, head, right shoulder, and you're just hanging up below that. The more this consolidates here, the more likely it is it heads down. So I don't think 25,000 would be your buy area, probably closer to 24. And the reason I'm getting that is if you just take the head and shoulder target, copy that, there's your break. So right just below 24, that would be your area for that measured move to play out. And then of course there's lots of support right here. Look, this is where you broke out from, right? So logical area plus upsloping 200 MA, that may be support as well if you overshoot a little bit here. One thing to also note too, Bitcoin has a history of being a little bit of a leading indicator, and Bitcoin hasn't made new highs since April versus stocks. So maybe it's telling us something here, something to keep an eye on though, and we'll watch that. Obviously with the stock market going into next week. Again, as far as the debt ceiling negotiations go on, could it be a sell the news event? Could they completely drop the ball and we have a 2011? I know we have sold off pretty sharply on debt ceiling negotiations before. It's not it's not an anomaly. We dropped 21% in 2011 off of that, so it is certainly possible. I'm not going to speculate as to how that, if and when that will happen. All we can do is look at the chart levels here, and we'll say, hey, this is resistance here. If you get back below 417, it's a little bit of a red flag here for bulls in the short term, because that was your breakout area. Or I should say, we'll say 415, we'll say 416. Okay, so this pivot high 415.72, and then you have the high there 416. You get back below that, it's a little bit of a red flag, especially if you close below this green bar. And then that 410 area goes, we're probably going down to 400. So I'm just going to kind of take the news out of it. It's kind of pointless to speculate over political theater here, but those levels I'm watching for the charts here. Anyways, guys, I'm wrapped up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you all next week.